What's going on, everyone? It's your boy Moo Trades. If y'all are out there trying to pick the right prop firm, trying to pick the right trading method, I'm gonna be showing a deep dive into the price action technique that I use day in and day out for the past 3 or so years. So let's get into the video. We're gonna be doing a bar by bar chart analysis, and I'm gonna just be doing a nice walkthrough, a nice detailed walkthrough of how I interpret the bars that are printing on the chart every single day. So let's get into it. These are S&P 500 futures. And before we go into a specific setup, I really just want to emphasize these 3 rules that you see here. So 1, before you take any trade, take in the market context. What direction should prices likely be headed? That's the number 1 most important factor that people fail to realize. Next, the setup. Is it a good setup? Is it on the right side of the EMA? The only indicator that I use is this 21-day EMA. And besides that, I like to draw trend channels and ranges. Lastly, what is the signal bar telling you? Do you know how to read candlesticks? Do you know what a doji bar is? Something like this versus a nice bearish or nice bullish signal bar that closes on its low or high. So in this video, we're going to be going over all of that. And the market opened right around this point. But in the overnight session, we had a move down. And then we just had some sideways movement. I really don't see anything worth trading pre-market. And it just looks like we could be in a range day. So even before any of the price action of the rest of the day, I immediately had this overall trading range drawn just to give myself an idea of what prices could likely behave like if we were to basically follow the range rules of the day. So we're at a potential low of the day, potential low of the range. So if it is a healthy trading range, then it's likely that prices would be seeking to go to the highest point of the day because that's where the liquidity is, and that's just how these trading ranges work. But in any case, we work back down into the lower portion of the range, and that's when we can start to see that, okay, even though we were supposed to maybe go all the way back up to the highs, we have to also keep in mind that we had this significant move down, so it's likely that also traders might be wanting to take out that low of the day before prices do reverse. So we get back to the bottom of the range, and we do have an interesting setup right here. So if we take a look at this, we have 1 bounce, 2 bounces, 3 bounces, 4 bounces, 5 bounces. This is the 6th touch at this level. So what's the context telling us? It's telling us that there is a lot of buying pressure here. It's an area of support. So we want to actually be looking for long setups because it might be counterintuitive, but you want to buy at the lows of the range and you want to sell at the high of the range. So what we had back here, it was a failed breakout of this mini range we were having, or this bottom half of the range within the overall range of the day. So when I see prices at the lows once again, we have a potential breakout or just a triple test just in this area, but in the overall context, it's like the 6th touch of the day. I'm really looking for a nice bullish signal bar that we have here and a good setup. So the context telling us that we want to buy low. The setup is telling us that, okay, we had this move down, we had a break, we had a new low, signaling this short-term downtrend is likely over. And then also on top of that, we have a significant area of support, and it's a great bullish signal bar. So I would believe that this is worth taking that chance, taking that risk, and then prices did exactly what we thought. So here we trade above the EMA. We have a nice bullish bar testing the EMA. It's a higher low, which under normal circumstances, this would also be a nice looking trade, except for the fact that we are in the very center of this trading range. So for me, for my rules, that's a no trading zone because we don't have a lot of room to the range highs. It worked out, but it's not always going to be that way. So here we're getting towards the top of this range once again, and notice what we have. So we don't get a nice bullish signal bar at the edge of the range, but what we do have is we have that lower high, but this time we have a lot of space to the lows of the range. If we take a look back here, if you went long above the signal bar, you'd be going right into the highs, whereas here, we broke out the top of the range, we traded below the EMA, came back, tested it, and then all in the same bar, we went up, traded down, closed below the EMA, near the lows. So let's take a look at our 3 rules. The context is telling us that, all right, we're at the top of the range, we had a failed breakout, let's look to go short. Next, the setup, it's a nice lower high below the EMA. Lastly, excellent signal bar, a bear signal bar nearly closing on its low, a lot of room to the lows of the day, and it worked out for a nice scalp. And that's all you need to make money in these markets. You can go for quick scalps. That's my price action technique, but there's a million of them out there. If you want to be consistently profitable, you got to just stick to one technique, stick to one trading strategy, and you have to be patient. It's 90% a mental battle. Just learning these price action techniques is just the first 10%. So it takes a lot of patience, takes a lot of practice, and a lot of just sitting on your hands like we have here. So we just have so many bars stacked, and it's really a no trade zone. We have a slightly aggressive, riskier trade right here because basically what we have is another trading range forming. So I like to call anytime we have significant prices or candlesticks that are stacked and represent a range or appear like a range, I like to draw these trading ranges to give myself an idea of what the price action is telling us. And we have a nice leg down, we have a break, new low. And even though I said it is an aggressive entry, when you are playing these ranges, because now if we zoom in, we're really just playing this most recent range. So we want to buy low, sell high. We have a failed breakout at the bottom that hasn't failed yet, but we're predicting that because most breakouts do fail, and we have a nice bullish signal bar on top of the fact that the overall context of the day, we still have room to the overall highs of the day. So the context is telling us that we are biased to go long because of the most recent price action, but also the overall price action of the day. We have a nice bullish signal bar. We have room to the EMA. So in my opinion, this is a trade worth the risk, and we just trade back into this range. So now at this point, we have a breakout at the top of the range. So we really might actually want to start looking for a short setup as well. But we just simply don't get a great one. Here we have a lower high, but it's in the middle of the range. It's no trade zone once again. And then we do eventually break out of the range. We reach new highs of the day that we were potentially looking for from the start of the day. And at this point, we're about 2 hours from the market open. And now we just continue to play the range rules because price action is just sideways, sideways, sideways. And we are actually now trying to look for a short setup because even though prices did work higher, it's not like we're in a massive uptrend. It's really still a range day, still range rules. So we have a failed breakout of this most recent range. We're looking for a lower high. We get one right here, but I would prefer to stay away from this because it's a great context trade. First of all, it's a lower high out of a potential range. The setup, it's a lower high, and the signal bar is great, except for one simple fact that you're going short right into the EMA. So if we have another test, which we actually have right here, it's another confirmation that, okay, basically those who went short here, it wasn't enough momentum to push prices down. We got rejected at the EMA. But now the fact that we have another test trying to make new highs that got thwarted, nice signal bar closing on its low once again. If you didn't go short here because of the resistance at the EMA, this is where you want to go short. and it worked out for a nice scalp. We went all the way to these lows, and now we have another triple test here, bullish signal bar. It really looks like we have two legs down just visually. We have one leg down here where we then tested the EMA, tried to push up. We have a measured leg, nice bullish signal bar. In reality, it looks like that two-legged pullback. So we have one big leg down, first entry long, second entry long. Once again, room to the EMA, triple test, bullish signal bar. You got a lot of opportunities in these markets. Here we have a higher low, but once again, we're very just in the middle of this range, close to the highs. So I'd rather wait for a short setup at the top of the range. And this is just another great trade in my eyes. It's another test at these highs, another bearish signal bar. Context is telling us to go short. Signal bar is telling us to go short. And it's a great setup. It's a new low. First entry short, second entry short. Not to mention that we have this leg up, nice and concise. And we have a clear break, new high. For all those reasons, let's take that short. And prices then did head down in a significant way. So now let's zoom out once again. And now I'm thinking, okay, if we're in a range, we were at the lows, we made new highs. Now it might be time to come back and test the lows of the day once again. We have this concise downtrend. Let's see if we can get a second entry short. We have a second entry short right here. However, it's too far away from the EMA. And then we are gifted with another rejection at the EMA, another clear one leg up, two legs up, nice measured move, clear two legs. These markets work in pairs of twos if you haven't noticed, but start noticing. Once you start kind of recognizing these patterns, it is a repeatable thing that you can learn to spot. Just stick to that method as we spoke about. This is a nice two-legged pullback if you're looking at the overall legs. If you like to count it from the lows, it's really a first entry short, second entry short that failed, and it's really a double trap. So it's a failure of a failed second entry short. Now we're getting a little bit advanced, but anyway, nice bearish bar at the EMA. Context, we want to make a new low. Setup, as we said, two legs to the EMA. Signal bar, great signal bar. And that was the last trade I saw for the day. So I appreciate you guys watching the video. Let me know what you guys think. And good luck to you. If you guys want to use my Apex code, click the link in the description. If you guys want to trade multiple accounts, use Replicanto. I've been using them for a while now, and it's all good to go. Have a good one. Peace out.